I've never seen the demand for precious metals even remotely close to what I'm seeing right now, ever in 34 years. Not even close, not by a million miles. And I will stick to what I've been saying on your show for the past 2 years. This market will define itself by the inability to source product when the music stops.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Are you ready for a market shakeup that could redefine wealth? Top market analysts have dropped a bombshell prediction, and it's sending ripples across the financial world. They believe that silver, yes, silver, the underdog of precious metals, is on the verge of an astronomical rise, potentially skyrocketing to a staggering $800. Imagine the implications, the opportunities, and the sheer scale of this shift. But how is this even possible? What seismic changes could drive silver from its current modest levels to soar to such dizzying heights? Stay tuned as we unravel the mystery behind this bold prediction. And hey, while you're here, don't forget to hit that subscribe button. You won't want to miss what comes next in the silver saga. As we delve deeper into this silver conundrum, let's first take a magnifying glass to the market's current state. Just this week, the silver price has experienced a bit of a stumble, losing ground for the second time, down more than 0.5%. Now, you might be thinking, how does a dip signal a surge to $800? Well, that's where it gets interesting. High U.S. Treasury bond yields have been playing a pivotal role here, acting as a headwind for our gray metal friend, which currently trades at around $23.57. But here's a twist. Despite this dip, the overall trend for silver isn't all doom and gloom. In fact, from a daily chart standpoint, silver's trajectory is neutral to upward biased. In the past few days, buyers have been wrestling to crack that 2-month high of $24.14. Now, this might seem like a minor skirmish in the grand scheme of things, but it's these battles that often prelude significant market shifts. And let's not overlook the importance of the 200-day moving average, currently at $23.30. This indicator is like a beacon for market analysts, guiding them through the fog of market fluctuations. If silver can consistently hold above this level, we might just be witnessing the early stages of something monumental. But before we get ahead of ourselves, remember, this is a market that loves its twists and turns. It's a roller coaster ride, and we're all strapped in. So, what do you think? Could these subtle market movements be the prelude to a silver explosion? Drop your thoughts in the comments below, and let's get the conversation rolling. As we continue to navigate the silver market's labyrinth, it's crucial to understand the power play between resistance and support levels. It's like a high-stakes game of tug of war, with $24 emerging as a formidable battleground. This level isn't just a number, it's a psychological barrier, a line in the sand drawn by market forces. Each time silver nudges close to this mark, it's met with resistance, a wall built by skeptics and cautious investors. But what happens if, or when, this barrier is finally breached? That's where the real magic could begin, with the next target hovering around the enticing $25.50 mark. Now, while these short-term skirmishes at the $24 level capture our attention, let's not lose sight of the bigger picture. Below the surface, the 50-week and 200-week exponential moving averages are lying in wait, offering a safety net of sorts. These aren't just arbitrary lines on a chart, they're historical signposts, guiding investors through the market's ebb and flow. When silver prices dip, these EMAs often act as a trampoline, propelling prices back up, and right now they're flat, suggesting a period of consolidation, a gathering of strength before the next big move. This period of choppiness, of highs and lows, might seem daunting, but for the savvy investor, it's ripe with opportunity. Each dip, each retreat below these key levels could be a chance to buy into a future that sees silver not just rising, but soaring. But remember, with great opportunity comes great risk. It's a market that demands respect, caution, and a keen eye on the ever-shifting sands of economic and geopolitical influences. So as we stand at the crossroads of uncertainty and potential, we must ask ourselves, are we witnessing the calm before the silver storm? Keep watching, stay subscribed, and join us as we continue to unravel this financial mystery. Peering beyond the charts and numbers, it's time to cast our gaze on the wider horizon where geopolitical and economic forces play a pivotal role in the silver story. You see, silver isn't just a trader's plaything, it's deeply intertwined with global events and industrial demands. In today's world, where geopolitical tensions simmer and economies dance on the edge of unpredictability, precious metals like silver often become the safe havens, the ports in a storm. But here's where it gets even more intriguing. while we often focus on silver as a financial asset, let's not forget its industrial persona. Silver's role in industries, from electronics to solar energy, means its fate is also tied to industrial demand, and in an era where green energy and technological advancements are not just buzzwords but realities, could we see industrial demand-driven surge in silver prices? This is not mere speculation, it's a possibility grounded in the shifting sands of global industry. Now let's throw another variable into the mix, the unpredictable nature of silver itself. Historically, silver has been known for its volatility, its noisy market behavior. This isn't a metal that follows a straight path. It's more akin to a wild river, full of rapids and unexpected turns. And in our current times, which are far from being the best of circumstances, this volatility could be amplified, making the market's journey towards our $800 target even more exhilarating. In this intricate tapestry of the silver market, there's another crucial thread we need to weave in: the influence of interest rates, particularly those in the United States. Interest rates are like the pulse of the economy, and their fluctuations can send shockwaves through the precious metals market, including silver. Here's a key insight. Traditionally, when interest rates fall, precious metals like silver tend to rise. It's a dance of inverse proportions, and right now, this dance is more intricate than ever. Imagine this scenario. If the US decides to lower interest rates in response to economic pressures, this could be the spark that ignites silver's rocket to unprecedented heights. But as we've seen time and again, the market is no stranger to surprises. There's a delicate balance at play here, a balancing act between monetary policy and market sentiment. And then there's market speculation, a force in its own right. Investors, traders, analysts, all eyes are on silver, watching for signs, hints of the big move. The market thrives on speculation, on the what-ifs and the predictions of future trends. This anticipation, this waiting game, is part of what fuels the market's energy, its potential for sudden shifts. But remember, in the world of investments, nothing is certain. While we explore the possibility of silver reaching the heady heights of $800, it's crucial to navigate these waters with caution. The market is a complex beast, and silver, with its dual personality as both a financial and industrial asset, is one of its most unpredictable components. As we reach the zenith of our silver odyssey, it's time to piece together the puzzle and see how all these elements could converge to catapult silver to an almost mythical price of $800. Let's connect the dots with logic, facts, and informed speculation. The journey of silver to this point has been a tapestry of technical patterns, global economic shifts, and speculative wins, all weaving together a complex market narrative. First, consider the technical landscape. The persistent battle at the $24 resistance level, once overcome, could open floodgates to higher valuations. History has shown that when long-standing resistance levels are breached, it often signals a significant shift in market sentiment and potential for rapid price ascents. Then, there's the macroeconomic view. In an environment where traditional assets are challenged by inflationary pressures and economic uncertainties, silver's allure as a safe haven asset could intensify dramatically. This, combined with potential policy shifts like lowered interest rates in the US, could provide additional thrust to silver prices. Furthermore, let's not underestimate the power of industrial demand in a world rapidly pivoting towards sustainable technologies. Silver's crucial role in various industries, particularly in green technology, sets the stage for a demand-driven price surge. As industries expand and evolve, silver's industrial demand could become a pivotal factor in its price trajectory. But, as we've explored, the silver market is notoriously unpredictable and volatile. This journey to $800 is not a guaranteed path. It's a possibility built on a complex interplay of market forces, economic trends, and investor sentiment. It's a bold prediction, but one that's not outside the realm of possibility in today's dynamic global economy. Before we wrap up, remember, this exploration is not financial advice. Always do your own research and consider your investment strategy carefully. And if you found this journey through the silver market as fascinating as we have, don't forget to subscribe for more insights and analyses. In conclusion, the potential for silver to hit $800 is a narrative of market dynamics, economic trends, and speculative possibilities. It's a reminder of the ever-changing and unpredictable nature of financial markets, where today's assumptions can become tomorrow's surprises.